Hi, everyone, and welcome to the second episode of the Compound Indian Investor. So, as always, we'll start with a slight portfolio check. So, as you can see, the value has moved up slightly over the week from 6.11 to 6.16 crores. It's not a big move, but it's just been 1 week. We're not here looking for massive moves every week. It's about consistently growing this portfolio to reach the target goals that we've set for ourselves, right? It was a busy week in the sense that there were two holidays. So, an unusual week and also the year ending week. So, let's move on to the first portfolio check. So, as we can see, this is the portfolio from when I started it, which was in July 2020. Since then, we've slowly but surely grown the entire portfolio, and you can just see how it's grown over time. I think it's always important to take a step back and look at how the portfolio has grown over a longer period of time to remind ourselves of why we're doing what we're doing and how a little bit of patience can go a long way. So we're going to start now with a review of the past financial year, which is FY24. So as you can see, on the 1st of April, when we started this year, my portfolio value was 3.83 crores. We've closed the year at 6.16 crores. So, that's really amazing how much the portfolio has grown in just 1 year. But obviously, it's been a year where the markets have really outperformed. If I'd done my yearly review for FY23, I don't even know if the portfolio would have grown despite how much money we were putting into it, right? So again, this just shows that the importance of the patience, that we need to maintain while being long-term investors. So the 2.33 crores equivalent to a 60.8% increase in a year. So it's not something that we can expect to achieve every single year. It's a fantastic return for this year, but I mainly invest in small and mid caps, and the small and mid cap index has gone up by pretty much the same percentage, right? I think it's been up by 60% year on year. So our portfolio performance is definitely going to mirror that to a small extent. In addition, we added 59 lakhs to the portfolio, but there was a payout of 5.85 lakhs. So the net addition was 53 lakhs. So that's how much money we also pumped into the portfolio this year. There is going to be some stocks, obviously, within the portfolio had underperformed, some stocks outperformed. Certain large cap stocks like Divi's, one of my other larger holdings, which was EPL Limited, has just not performed in the last year. So, a few stocks here and there haven't performed. And also, in these sort of situations where you find outperformance, you tend to take money out of certain stocks and move them into other stocks that we might feel are slightly undervalued and might give us better performance the next year, right? The other thing that I wanted to show you guys is the trading profit that I've had in the last year. So approximately 21 lakhs of net profit is what we managed to record. All of this is pretty much long-term profit. I very rarely engage in any short-term trades, so all of this is just long-term profit. And what's interesting to see here is that in the stocks that I exited, if I hadn't exited it then, I would have made way, way more money. So if you look at rights, I exited at 368 rupees. It's somewhere near 600. It's over 600 rupees right now, right? FDC is trading at around 420 rupees. So I don't feel bad about that exit. I think it was the right decision. Cochin Shipyard, wow. I mean, I exited it at 676 rupees pre-bonus. It's now trading above that ex-bonus. So you can just see, I exited a big portion, 1,800 shares. I made about 5.6 lakhs, which is, I almost doubled my money, right? So I thought it was a good exit. But if you see the remaining shares that I had, which was of about 3 lakhs 26,000, I'm making over 11.5 lakh profit just on that position. But and I've always found this, that in long-term investing, I've always exited certain stocks a bit too early. Cochin Shipyard, I held on to it for such a long time and it did practically nothing. And then when the movement started, I started trimming my positions. And maybe I should have held on for a little longer. I do think these stocks are right now overvalued, though. The PSU sector stocks have really rallied in the last year, including RITES and Cotton Shipyard. RITES, especially, I think, is ridiculously overvalued. It just doesn't make any sense to me. Cochin Shipyard, though, I'm still going to hold on to the current shares because there's still strength in the stock in terms of the vision for future, and the defense spending is also there. I do think valuations are a little bit stretched, so I might trim positions over time, but I don't see myself completely exiting this position anytime soon, at least. With McDowell's, I sold about half my stake, made a decent profit in that. I'm probably going to be completely exiting McDowell's very, very soon. When I bought McDowell's, it was bought at multi-year lows, and there were a lot of positive factors in terms of clearing out the debt. I'd bought it, I think I started buying it in 2021 when people were still very concerned about the pandemic after the second wave. And so that's why the stock was trading very low. And there are a lot of positive factors to push the stock higher, right? But right now there's nothing left that's going to see an unnatural upside in earnings. I think the stock will just continue to give you 10-12% sort of returns going forwards. I don't think the valuations are too low or too high. I just don't see much. I don't see any surprise, basically. So I don't see any surprise for the outcome over there. The other stock where I trimmed my position, or I mean, almost completely exited, was Borosil Renewables. I'm going to talk more about Borosil Renewables maybe next week, along with McDowell's. Borosil Renewables, especially, is a very interesting case study for me personally because when I entered this stock, it was my most successful stock for a while, and now it's probably become my most unsuccessful stock. I'm down right now 20% in the remaining holding, and it's a stock that I accumulated a lot on the way up. And now that the fundamentals have changed, it's just not a stock that you want to own anymore. And I'll be talking about my learnings. And I think it's important for me to also show this and to explain the fact that even though I've exited and made money in some of these scripts, I've exited them at the wrong time. And, I want to explain, like, I don't only want to show the good things. I also want to show the fact that I make mistakes as an investor, and I make a lot of mistakes as an investor. But I think the important takeaway from that is that the mistakes that I'm making, despite the mistakes that I'm making, I'm still making money, good money. And I think that's what I want everyone to see, that you don't need to be super smart or you don't need to be perfect to be a good long term investor and to build your wealth over time. You just need to be consistent. You need to just keep staying at it and keep trying your best. The other thing that I want to talk about right now is the dividends. So this is also something that I'll be tracking year on year to see whether or not I'm slowly growing dividends in the portfolio. I think eventually when we talk about things like passive income and we talk about financial independence, we talk about having that comfort in our minds. I think we have to keep looking at our dividends. But at the same time, I will say that the focus currently for my portfolio is not in growing dividends necessarily. I first want to achieve my net worth targets with the portfolio, which I had mentioned earlier, which is 7.5 crores by the end of this calendar year. So by December 31st, 2024, I want to reach 7.5 crores. And by December 31st, 2025, which is the end of the calendar year next year, I want to reach 10 crores. Those are my targets. Maybe I'll talk a little bit more about it in another episode about why those are my targets, how I've calculated that should be my target. And keeping those targets in mind, dividends is not the focus, right? If I'm investing only in dividend stocks, you're never going to see that kind of portfolio value growth. So my target for now is to focus on fast growing small and mid cap counters that have strong fundamentals but are also going to show faster earnings growth so that we can achieve those portfolio value targets. And I think that once we achieve my long term goal, which is by December 31st, 2029, to reach a portfolio value of 25 crores, I think that's when I'm going to start focusing more on gradually shifting focus to dividend stocks, because then portfolio growth will less be my focus and to be more about passive income generation and living off that passive income. But in general, now we can see the different stocks that we currently own and who's been paying me how much dividend. So you'll see that there's a few stocks in there that have hardly paid any dividend over the years. I mean, over the year, and there's some stocks that have contributed to the majority of that dividend. And you can also see how the dividend has grown over the past few years. So in my first year, I had less than a lakh of dividend. In the second year, I reached 3.75 lakhs of dividend. In the third year, which was FY23, there wasn't much year on year growth. I was shifting a lot of stocks out from dividend paying stocks, including some REITs that I'd invested in, and shifting more and more into small and mid cap stocks. And that's paid off, right? Because that's where you're seeing the kind of growth in portfolio value this year coming from. And in FY24, we finally crossed 4 lakhs of dividend. 4 lakhs 36,000 is the total dividend that we've achieved. So it's a good year on year growth in dividend in general. And I'm very happy with that. Considering the portfolio value growth that we've seen, we've also seen a dividend growth. I don't have targets necessarily for achieving dividends, but I do think that this coming financial year, I do expect the dividend to grow again. There are certain scripts like Coforge, LTTS, Kaplan, EPL, that I'm expecting them to just pay higher and higher dividends going forwards. At the same time, certain stocks like McDowell's that have recently started paying dividends, I might be trimming positions or exiting positions. So there will be some rebalancing over there. But in general, currently, I'm happy with the status. If I expect to at least get the same amount of dividend in the coming year, and a fantastic goal would be crossing 5 lakhs of dividend. If that happens, great. I'll be super happy with that. And as I said, we'll always be ending each episode with a quote. This time, the quote is from a European investor called Guy Spear. He says, "The path to true success is through authenticity." And that's what I'm here to do. I'm here to be authentic with you guys. I'm, showing you everything openly so that I can learn and you can learn with me. That's the purpose over here. And hopefully we can all achieve true success together. So thank you again for joining in for this episode.